Well, the COVID second wave has certainly had a varied impact on the various sections of the economy, and vehicle financiers have also been impacted. In fact, ET now caught up with the management of Shriram Transport Finance as well as Indostar Capital to understand the impact of the COVID second wave on the vehicle finance industry, how the overall commercial vehicle cycle is actually shaping up. In fact, in an exclusive interview with Umesh Revankar, who is the Vice Chairman and MD at Shriram Transport Finance, Mr. Revankar stated that the impact of the COVID second wave on the business per se is not as much or not as high as in the first wave. They were able to do the business in the second wave, unlike in the first wave, wherein there was a complete lockdown, and they were also able to meet customers and collect money in the second wave. And as of June 15th, the business has certainly come back. Most customers, who are the likes of individual operators as well as owner operators, do not have that much of an insurance, and hence they are keeping certain amount of cash for emergency use, and to that extent there is certainly an impact. In fact, Mr. Revankar also stated that postponement of payment may result in stage 2 and stage 3 buckets rising slightly, and hence we will see some amount of increase in the NPAs, but he believes that the impact on the asset quality would be on a short-term basis only, and it would only be reflected probably in Q1 of FY22, wherein we may see rise in stage 2 and stage 3 assets. But Mr. Revankar is hopeful that we should see some amount of normalization coming from Q2 onwards, and they would be making good amount of provisions in Q1 itself, so that there is no surprise, or there is no negative surprise going ahead. In fact, Mr. R. Sridhar, who is the Executive Vice Chairman and CEO of Indostar Capital, he stated that the COVID-2 has been managed by the state government versus a national lockdown during the first wave, and collection challenges had started since March 2021 itself. Moratorium had not been extended this time. It is only restructuring that we are seeing in COVID second wave 2, and hence Mr. Sridhar does see the overall credit cost to go up and collections to come down in COVID-2. They're expecting rise in 90 plus bucket due to COVID second wave, and customers may not pay probably 1 or 2 installments versus their original 3 installments. In fact, management also states that they feel from the next quarter there will be improvement as the economy has already started unlocking. In fact, Indostar management also stated that with the input costs rising, yes, there is a challenge, and hence they do see some of the credit costs to go up, but they have made adequate provision cover. If unlocking happens, and if truck industry comes back to normalcy by the second half of FY22, then growth would be there and credit cost would be less in FY22, and they do see a lot of potential in the used CV segment, which is a segment wherein they are focusing. In fact, in a very latest report by Credit Suisse, in a survey by Credit Suisse, they stated that improvement of collection efficiency is seen from June onwards on the back of the opening up of economic activities, and expect NBFC lending to the owner-driver segment to see lower addition towards stressed assets. Expect NPA ratio for vehicle financers to reach 8 to 11% in Q1 FY22, and collection efficiency in May had dropped slightly, had dropped to nearly around 50 to 80%, but they are expecting the NBFCs lending to this segment to see lower additions towards stressed assets as the economy opens.